What if the next trillion-dollar investment isn't made by a human, but by an algorithm? For decades, private equity was powered by instinct, spreadsheets, handshakes, and a little bit of luck. But today, one of the world's largest investment firms, KKR, is turning that old formula upside down by letting artificial intelligence take the wheel. This is the story of how AI and generative AI are transforming the secretive world of private equity, from how deals are found to how billions are deployed. Quick question: would you trust AI to decide where your money goes? Yes or no? For most of financial history, success meant who had the best gut feeling. But as data exploded, that instinct became impossible to scale. Private equity firms, once run on spreadsheets and handshakes, faced a problem: too much data, not enough insight, and that's where KKR saw opportunity. In 2024, KKR migrated its global systems to the cloud, Amazon Web Services and Azure, not to cut costs, but to unleash artificial intelligence across every corner of its empire. Think of it as turning a 47-year-old finance giant into a living learning machine. AI now screens thousands of companies daily. Machine learning models predict market demand, while generative AI tools summarize contracts, earnings calls, and even ESG reports in seconds. Traditionally, due diligence, the process of investigating a company before buying it, could take weeks. KKR's AI does it in hours. Using natural language processing, it reads legal documents, scans news headlines, and detects risks even seasoned analysts might miss. It's not just faster. It's smarter. Predictive analytics model the future performance of companies before the ink is dry. KKR didn't just buy AI, they built their own. Their Chief Information and Innovation Officer, Emilia Sharapova, leads a digital transformation program that's modernizing KKR's entire core. From back-office automation to generative copilots that help analysts write investment reports, AI has become the silent partner in every deal. KKR's investments now include AI-native companies like O9 Solutions, which builds supply chain digital brains, and ReliaQuest, a cybersecurity platform powered by agentic AI. They're not just betting on AI, they're funding the very infrastructure that makes AI possible with a $50 billion partnership to build data centers around the world. KKR isn't alone in this race. Blackstone, Apollo, and Carlyle are all arming up with AI. Blackstone's 400-engineer data science group invested $300 million in AI storage tech. Apollo is pouring billions into semiconductor fabs. The battle for AI dominance in finance has officially begun. But there's a catch. AI doesn't just amplify intelligence, it amplifies risk. Biased models can misjudge companies. Automated trading can trigger losses in milliseconds. And the bigger threat? Dependence. If AI replaces too much human judgment, who's really in control? The investor or the algorithm? Governments are catching up. The SEC is now probing how asset managers use AI, demanding transparency and audit trails. Meanwhile, the EU AI Act will soon classify financial algorithms as high risk, carrying fines up to 7% of global revenue for violations. Here's the twist. KKR's AI isn't replacing humans, it's replacing bias. By freeing analysts from grunt work, AI lets humans focus on creativity, strategy, vision. The very things machines can't replicate yet. The future of finance isn't artificial, it's amplified. By 2030, AI won't just assist investing, it will be investing. And firms that can't adapt won't survive. KKR's transformation is proof. The age of intuition is ending, and the era of intelligent capital has begun. So the next time you hear about a billion-dollar buyout, ask yourself, who made the call? A human or a machine?